Hello, everyone. Welcome to TaxExterminator.com, where we kill taxes dead. You're going to learn how to reduce your taxes legally beginning today. I'm your host, Brent Jordan. I'm a veteran tax attorney, former UCLA adjunct professor, and current district court trial judge. Today's webinar is entitled The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year. The legal authority for this webinar is the IRS Tax Code, United States Treasury Regulation and Tax Court Rulings, and the IRS Revenue Procedures, Private Letter Rulings, Publications, the Manual, and Tax Forms. Today's segment is entitled Missing Office Deductions. Before we get started, little cartoon. Here's an IRS agent lecturing to a group of students who want to become IRS agents themselves. And the professor says, and then you smile and say, all together now, that's not deductible. The three areas that I want to look at as far as missing office deductions that most business owners don't seem to address is the home office, independent contractor status, and equipment. Let's first look at the home office. For self-employed individuals, they can have a home office if an area in their home is used exclusively and regularly as a home office, and it's the principal place of business. Now, most individuals know they can have a home office if they have no other office outside the home. But if properly structured, the IRS will approve of a home office in addition to an office outside the home for the same business. Now, for you employees out there, you can also have a home office if you meet the convenience of the employer test. The IRS requires that this test be supported by a list of facts and circumstances. In other words, the totality of the circumstances. But the IRS has certain specific matters that need to be addressed to meet the convenience of the employer test. Let's turn to independent contractors. Why should a business owner attempt to have independent contractors instead of employees as employees? Because with employees, the business owner has to pay half of the payroll taxes, which is approximately 7.6% of the employee's earnings for FICA and FUTA. Whereas with an independent contractor, the employer does not need to pay these taxes. The IRS has a specific test it calls the control test, and it's based upon various factors under the listings of the relationship between the parties, the behavior of the parties, and the financial connections between the parties. If you meet these tests, an individual will be considered an independent contractor instead of employee, which will then allow the business owner certain tax benefits. Finally, equipment. Most business owners are not aware of the fact that if they acquire equipment such as a television or a computer or a vehicle, that is an SUV, that IRS Code Section 179 allows a first-year deduction of $25,000. And that covers most of the items I just said. Most business owners depreciate their equipment over a long period of time instead of taking advantage of this IRS 179 deduction. Lord Thomas Dewar once said, "The only thing that hurts more than paying an income tax is not having to pay any income tax." There's a treasure chest of free money buried in your business. Claim it today. Well, that wraps up another segment of this webinar entitled The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year. Brought to you by TaxExterminator.com, home of the Proactive Tax Plan. Thanks for joining us, and I look forward to seeing you at segment number 4, Missing Meals Deductions. For a limited time only, I'm giving away a free copy of my tax strategy book entitled 10 Powerful Tax Strategies That Pass IRS Scrutiny. I published the book with Amazon.com and Barnes & Noble, and you can obtain a free copy right now, today, at TaxExterminator.com.